Heart beat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I haven't met. I've been down where the doubt is loud. I've been lost in the digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantees, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway. Late night glow from a silent screen. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I have. I've been down with it loud. I've been lost in a digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantee, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway.
Oh yes, we are together, guys. Myself and Devilt, we're doing a combo here, technical analysis today on the stream to discuss what are the different scenarios that could happen here on the price of Bitcoin. Devilt, how are you doing, my man?
I'm doing fantastic, Andy. Great to finally do a collab together. I think the community has been waiting for Devilt and Andy to do a live stream together where we put four eyes together on the screen and put our brain power together and assess, well, what is potentially the next trading opportunity, the next move, what can we expect on Bitcoin. So I'm excited to do a collab with you, Andy. We've been wanting to do this for so long, and I think, you know, maybe we'll start doing this a little bit more frequently, maybe once every week or second week or so.
100% Devilt. This has to be done more often because we do very similar analysis and we're going to come to the conclusion of what is the highest probability moves and where are the opportunities lying here on the chart. So super excited, Devilt. And yeah, I mean, I'm sure the community is excited as well. Just going through some comment sections here. And I can see, you know, are they going to go live together? Is it Devilt? Is it Andy? So some people are already speculating that, yes, they're going to come together. So apparently we got some echo here, they say, in the comment section. Is it very bad? Yes, there is an echo when Andy is speaking. Okay, so that's something that... Yeah, I'm not sure if you got the echo cancellation on
what
Devilt.
I will do is maybe I've got my echo cancellation on, but what I can do is I'll plug in my earphones, and I think that will help. So let me.
Yeah. Also, we have. Also, some people are saying that I have some lagging issues. So yeah, I'm lagging a little bit the mic with the screen. So there's some Andy sound. Yeah, there is some echo on my side. Yeah, we knew that this was a possibility, guys. So bear bear with us here for a second. We knew that we could have some technical issues. We've been trying to fix this throughout the last hour.
Yeah, just bear with us, guys. This is our first collab, and we're still figuring out the software. Well, not our first
now
collab.
it's working.
It's
working.
fixed.
It's fixed. You absolute legends here in the comment section, giving us the feedback. Apparently it's fixed, Devil. So we are good. Perfect. That worked, Devil. Whatever you did, Devil, it worked. So
did it work?
Absolutely awesome. Yeah, we have confirmation here. It's much better now. Let's go.
Much better.
Nice.
Okay, there we
All
go.
right.
There we go. Right. I think all I needed to do is plug in some earphones. Maybe that's all that needed so the echo doesn't come through. So let's go. Andy, do you want me to start? Yeah.
Absolutely. Mario and Luigi are back. We have here from Vegas Claw. Beth Maria Vallejos, much love to everybody. Nico Soapy here, the absolute legend, giving love and support. Much love to everybody. Love the stream. Smash up the like button. Okay, Devil. Yeah, I mean, let's not waste any more time. I would love to go through comment section, but as we're doing this collaboration, I think it's not going to fix in nicely. So, Devil, I'm happy for you to open the stream, open the charts, and discuss some scenarios. Somebody was saying in the comment section, a lot of people are expecting 60K. And, you know, it is looking interesting. We were discussing a potential higher low here to maybe claim 72K. I did put on a poll to what comes first for Bitcoin. Is it 72K plus, which is the recent highs that were formed last week? Or do we get down to 60K? 62% over 100 votes are calling for 72K, which is the range highs that we have in this range. So I'm happy to hear what you think about it and what analysis you have for the community and for myself eventually.
Perfect. So I think, Andy, maybe to keep everyone in a little bit more suspense, stick around for the alpha. This is the 15-minute time frame, but I think we're going to talk about this just now, okay? For now, maybe just to highlight what is happening, we have broken trend. Looks like it wants to go at the moment. You want to see some high time frame or some candles closes above the trend. Is there a possibility for a fake out? Always. But I think we will discuss this little structure here in a moment. First, what I want to do is maybe zoom out to the 4-hour time frame and just look at do a little bit of a recap on the larger structure here to the downside. So 4-hour time frame, and let me just take my stuff here out the way. Looks very interesting. Because we still have, and I see, Andy, you've also been speaking about this scenario where we basically have this little move, okay? I have it saved here in a folder just to make it easy. And the question now is, we have the parallel channel. In Elliot wave theory, they also teach you about channeling. And basically they say you want the impulse in most instances, the most common way that an impulse plays out is that you use wave 1 and 2 to draw your channel, and you want the impulse to finish outside of the channel. It's fine if the fourth wave gets into the channel, but it should not tap the top of the channel. It can go out, but it's rare. So, and if you're a probability trader, you want to trade with probabilities. So, I mean, and there's also the 618, which is the invalidation for the fourth wave, which so coincidentally aligns with the top of the channel as well. So I think the most interesting scenario at the moment is, are we going to make another low? And I think that also presents a very interesting longing opportunity. And you basically have your a running flat, WXY, however you want to count it, and you have a move here to the downside on a high amount of volume. You want to label the highest amount of volume move as your third wave. And now the question is, what is going to happen here? Because we know, myself and you, Andy, we know that fourth waves can be very complex and they are extremely difficult to trade, and they just cause frustration. The question is, was that
day trading range, basically?
Exactly.
Right? Yeah.
You need to play your swing failure levels, your daily levels. It's not an easy range to trade. Exactly what happened here. This was also not an easy range to trade. And I mean, that there was a lot of trading opportunities in that range, but I think that's also where a lot of people lose money. People make money with big moves to the up and to the downside, but they struggle with range trading. Anyways, let's just carry on with the scenario over here. The most interesting scenario now is to say that, well, you have a 1, 2. Is this the end of 3? And now we're forming 4 that maybe ended over there. It is valid, according to my analysis, that a 4th wave can end over there. If you measure the length of 2 against 4, it did surpass the minimum requirement. Ideally, you want to see a 4th wave extend a little bit to be longer than the 2nd wave. That's most common. Okay, but you don't always get the common scenarios. Sometimes the less common scenarios play out. So the question is, are we going to form a higher low and continue, maybe reject here by the 50%? Because this is the zone that you need to pay attention to. And if you are in a long inside of this zone, I mean, for me, this is just such an obvious profit-taking area. Protect position, leave a runner. If it wants to go, let it go with your runner. But this is not a zone when I'm going to be looking for longs.
So, for sure.
As per the community's question, okay, can we count this structure as an impulse to the downside where we just gonna, and maybe all of this moves up? Or do we extend the 5th wave here to the downside? And we basically just form a beautiful 3-wave structure like what happened here. 1, 2, 3. That little lightning bolt. I like to call it the lightning bolts. 1, 2, 3. And then, bam, here to the downside for the 5th wave. But I think the good thing about this scenario, Andy, if whether it falls down or whether it falls down, this is a very interesting longing opportunity. Because the worst case scenario for me is at least you expect a retracement in a 3-wave structure to correct the impulse. So you can take advantage of that move. Best case scenario is this is a low and it goes. It creates a 5-wave impulse to the upside and it just continues. But from a day trading perspective, I mean, this is already a great risk to reward trade. But I know the market loves to front run. The market loves to confuse us. Like, where do we get in? Maybe this was the end of the fall. We're gonna fall. So I like to say, trade the structure that makes sense to you. If price falls to the downside, I'm looking for longs. If price continues up, I'm looking for shorts. I'm looking for longs. So I think you just need to be a little bit patient with the structure, because I mean, this is the 4-hour time frame. It's going to take a couple of, a week or two for this to play out, especially if we first come here and then we fall to the downside. But now, this is now, I think, this is the most obvious scenario. What if price does this?
That's what I like to take a look at. What if we do not reject after taking out the local highs at 72K, right? So, I mean, the idea here is we form a 3-wave structure. If we do take out 72K on the higher time frame, we'll still be looking for that wave 4, right? But what if the pump extends, right? The invalidation for that wave 4 is that golden pocket as you have it right there at 78.8K. If that level is hit, then what comes next, right? I think we have to reevaluate the movement once that level is hit. But as when it's hit, then we'll talk about what are the next movements. As that's, we're not going to speculate on the next wave of the next wave. We go with with the information that we got, right? Basically, so. Devil, I couldn't agree more that this is like the most attractive scenario at the moment. The overall question now comes in the lower time frame, right? The 1 hour, the 15-minute time frame. Is that high in already at 72K that we formed last Sunday, if I'm not mistaken? And we're rolling down from here, right? What would be the scenarios if we roll down from here, or is this movement down from that wick high that we had on Sunday at 72K? That's the most interesting the most interesting wave that we have at the moment is that downtrend that we've had in the last few days. Literally, as in what is this? What do we have here? What are the different combinations? Does it make sense that we could pump from here to 72K? Or is it just going to be another lower high to break down to 60K literally? Or maybe take out the local lows and still form a higher low at 64, 65K?
Yeah. So for me, Andy, I think there's a couple of scenarios. The most, let's, for fun, let's share the most bullish case scenario. What could play out here? And like you've also pointed out in your previous streams, this structure can be counted as a three-wave structure, but it can also be counted as an impulse. Okay, 1, 2, 3, 4, 5, and you have your fourth wave here in a triangle, which is perfectly fine. And then this is your correction for this impulse. From a timing perspective, the balance looks fine. And now the question is, most interesting, what is happening here? Can you form an impulse here to the upside? And I think, Andy, myself and you actually spoke about this little structure here, but I'm going to leave that alpha for you to discuss. Okay, so
I have to give you discussed this inside of the trading community about forming a higher low today at 66.7K ish. You're very vocal about
this
holding here and potentially moving up and breaking trend and maybe, who knows, get a wave 3 from here or a double 1-2. So I need to give kudos to you here, Devil, because you spotted this today as this actually might form a higher low and we might be breaking trend here. Previous day point of control basically is holding, and the movement that we had to the upside since we claimed 66K yesterday, so we got that little drop to the downside. That movement up, this next move up can be counted as an impulse. And the little range that we formed between, this morning, right, early this morning and today, is corrective. And you actually, kudos to you, Devil, here. You spotted that. You know what? This could be a higher low and price actually leaves the station from here. I'm always aware about the bearish scenarios and the fake out. Obviously, I like to say, it looks good, but what if it's not? What is the bearish scenario if it fakes out of the trend? But I right now I'm going to leave you with the analysis so you can discuss this. But there is that potential that yesterday could have been the low, and the price has a chance at this point to grind up to 72K in the coming days. There is that chance for sure. However, does that mean we long here where we are at the moment? And I'm obviously going to say no. And there is some invalidation levels, but that consolidation that we had today, where you discussed in the community, guys. By the way, if you want to join the community, the links are in the description. Okay, you have our Telegram, and you can send us the word access, and we'll share the information so you can get 2 months for free inside of the trading community. But you were discussing as, hey, we could form a higher low here. We're holding previous day point of control, move up from yesterday to early this morning is an impulse. We're correcting here. What if we do break out? And we kind of getting this break of trend. This local move does look impulsive. What are the different scenarios that could happen here?
Andy, and I think it's also, what I told the community this morning, this structure has become so complex. And yes, there's some Elliot wave counts for it. But what I wanted to do this morning in the community, and for those of you that are in the community, you know exactly what I'm about to say, because I did not share a lot today. I literally shared 2 scenarios. And I said, I think one of these 2 are going to play out. Be ready. Okay, and from a simplicity perspective, this is all I showed. I didn't put W, X, Y's or anything in the chart because I wanted to keep it simple, because I know that I can count I can count a completed corrective structure at this low. It's not pretty, but you can. Then what I told the community is price was over here. And I said, as long as we can hold the point of control, there's a chance. Look at the break of trend. But this was, by the way, a great entry. Stop goes below the low, or the low, however you want to manage your trade. Wait for the trend to break. Okay, maybe we get a little bit of a retest and continuation, but it is definitely an attempt with good risk management. And Yeah, on the five, I mean, dare I even go into the 5 minute time frame? What does look interesting here? And I mean, guys, this is why we trade with stop losses, because nothing's ever guaranteed. And as per the disclaimer, myself and Andy are just two crazy dudes here on YouTube sharing with you what we would do and how we tackle the markets.
Yeah.
So this looks very much like a 1, 2, 3, 4, 5. There's an impulse. You can count an impulse here. Okay. Or 1, 2, 3, 4, 5. However you want to count the structure. This looks very corrective. And now here again, 1, 2, 3, 4, 5. So could it be the potential for a 1, 2, 1, 2? You should not, that's your invalidation. You should not claim this low for this double 1, 2 to play out. So maybe a retest here of the trend, maybe still holding the point of control from this low.
Yeah.
So that for me is a potential trading opportunity if you did not get into this trade just as yet. It has a clear invalidation.
Yeah. Absolutely.
So
it
looks great.
It looks clean. It looks clean. As you're discussing here, I would say, you know, as we're getting a slight move down now, it would be nice to get down to the golden pocket zone, 50% to the 7-8 Fibonacci range, right, from that latest move to the upside that we've had today, and kind of have lots of overlap, right? See the price that is holding, right, around about 67k-ish, right, all the way, 67.3 in that zone. You know, this drop, if we're gonna start dancing around, I think, you know, we could definitely you know, approach this as a possible higher low, right? Kind of back test the trend line. Also, the almost getting to today's point of control actually is slightly higher from yesterday's point of control. Now, when you put the session volume profile, the point of control of today is actually from this little consolidation that we have. You know, now we formed, but there's a high volume node also. Exactly. So getting that movement down here and dancing around a little bit. So we're not interested in a waterfall or you know, big move down. We need a hold above 66.6k, right, which is that recent from the low of this recent impulse. If we do hold this area, you know, I'm you know, definitely going to take the attempt here. Stop loss below 66.64k, literally. So now that we're getting this movement down, you know, it's going to be interesting to see if we do hold, right? So,
and I think what's also interesting for me, Andy, is, and this is just my style of trading. Everyone has their different style. Usually when I see an impulse, on the 5 minute, 1 minute time frame, I will go and measure from the low to the high, how long, okay? And if price does, there's my minimum target. So how I like to approach the market, if this continues without taking the low, it becomes a very interesting long for me. But if it falls before it takes my minimum requirement, I don't enter the trade. It's just my trading rules that I apply.
Yeah, the timing basically, right? So cross that 382 Fibonacci time.
Yes,
just to have it a little bit more.
I see often in the past, what I've seen is people see the impulse. Yeah. Okay. And it could be a wave C, but you don't know
exactly.
Until. And then price retraces and they enter like crazy people. And they're like, wow, stop goes below the low. I'm entering over here. And it does a 1, 2, 1, 2, 3, 4. And it stops them out. And then I don't enter. And people ask me, why did you not enter the retracement? And I will say, it's because it did not surpass my minimum time requirement. Yes, there's always the chance that it just runs away. But I have to, at the end of the day, follow my trading rules. My trading rule says that if I see a 5-wave impulse, I only become interested in the retracement if price is and it still has not claimed the low.
Absolutely. I mean, it's all about the probabilities. Fibonacci retracement and timing, you know, it's the same probabilities. I was talking about this as in the Fibonacci retracement, the 382 Fibonacci retracement. after an impulse is hit over 75% of the times. And the same applies with timing. The 382 Fibonacci time is, hit over 75% of the times. So if you are longing before that level is crossed, you're longing based on the 25% of times that you need to cross that level first before considering that long trade, right? So at the end of the day, it's all probabilities, right? If as you said, it's a rule for you, preferably we do cross that pivot, the 382 fib time, because it's just what usually happens, right? You want to trade what usually happens at the end of the day.
Yeah, and it's trading probabilities at the end of the day. And sometimes the 25%, so, and I think we have a percentage, 25% of the time I'm looking for a long, and price does this and just leaves without me. But I have learned over the years that I'm happy to miss the trade and I'll look for a next trade. Because what's kept me successful as a trader is the fact that I'm respecting my rules and I trade with probabilities. So 75% of the time I'll catch the move with great risk management, and 25% of the time something happens where I'm just like, well, it didn't fit my rules. So happy to have missed the trade.
I mean, as I like to give examples always, right? When we, because we also educate a lot of people, in our streams. And when we give an example, we could just go with the previous move up that we had from yesterday's lows. When you see that potential 5-wave structure and how we finished this 3-wave move down, so we finished after.
Perfect example is, let's do both. Let's do Fibonacci retracement from the low to the high of the structure. Where did we bounce? 618. Okay, for those of you that, I mean, look at that.
Yeah, exactly. So we did cross the 382, which is like kind of a minimum target, because it's over, I think it's 77% of the times. It's actually cool. We can actually get a scale on the percentage times that each fib level is hit, also with timing, just to like give you the highest probability fib levels that are hit. And literally here we did cross the 1-to-1, right?
And look at this, 1-to-1. So you also
if you long
sorry, Andy, look how interesting. If you longed here before the minimum requirement, you would have been stopped out. So you see the impulse, you long the retracement, and then bang.
Yeah, exactly. So this movement to the upside, we can agree, both of us, that it could be a 1-2, and now we're forming another 1 and 2. It could be on the formation here in the next, give or take, an hour or so, right? This is the 5-minute time frame. So to cross the 382 Fibonacci, I would say it's round about an hourish from now, at least. I would say, just out of the blue here. But and this literally would be your invalidation. Now the thing is how to trade this. If the price is moving down from this pivot, from where it is right now, and it really nukes, there's no trade to be taken.
Yes. Especially if the low finishes before the 382. So if price, and I'm so glad I have my rules, because I see this often. Price falls down and I'm like, thank God I didn't get into the trade, because I was waiting for this. So if it wants to fall, let it fall. It's not time. I like to say this. It's not time for me to enter the trade, because the Fibonacci shows me it's not time yet. So that's why I don't FOMO into trades. I have to respect my rules. But if it does this, now that's interesting. That is very interesting.
Lots of overlap. You've crossed the timing, and I think it's actually a very good attempt. And because your invalidation is so close that it's all about risk management, right? At the end of the day, your percentage loss is so small for the potential of forming a higher low and maybe reaching 72K plus in the next coming days, right? If we are looking to fit, because what we do also as Elliot wave traders, right? We try and identify the the first waves of strength of market structure, right? Before the wave 3 comes, right? Or the wave C to the upside, the third wave, right? Can we detect when that is going to come? And this is one of those stages right now where we might be in the double 1-2, where it's fantastic to see the price retracing at this moment that we didn't blast through. And now we know what we're looking for. We preferably cross the 382 Fibonacci time. This move down needs to get some kind of a reaction before taking out 66.4K, right, the low. And it needs to form a little bit of choppiness, right? It needs to dance, like I like to say. The price needs to dance around a little bit here, so we can understand that it's forming a potential correction here. But it's interesting because this might be it, right? We always talk about we're looking for the longs. We need more information. Information is given already throughout the last few days with this momentum to the downside since Sunday, since the highs of 72K. We have this information right now. Then we can understand that this might be it, where we move in a third wave in the next couple of days. And this is just your beginning couple of 1-2s, right? And then, we understand that, this is the opportunity that we've been waiting for the last few days. So without a doubt, it's one of those moments that we need to take action, right? At the end of the day, you can be the best at analyzing and looking at different waves and levels, but then it's action taking, right? Now is the moment of, okay, I need to manage my risk. I know where to take action. And, I know where the targets can be. I know my invalidation. You have it right there on the chart. I know the price can pump from here. And I know it can, we know it has the possibility to go to $72,000. So the risk reward is like really, really attractive.
Crazy.
Right? So
I mean, to your point, Andy, if this had to play out, and this is building the double 1-2 for a bigger move to the upside, let's just call it a bigger move to the upside. It can be a third wave, it can be a C wave, but I mean, let's plan this trade. Let's say the invalidation, okay, you enter somewhere in this zone, your invalidation is where it's supposed to be, and you're targeting, be conservative, you're targeting the highs. That's an 8. From a technical perspective, you cannot ask for more than this. But I think the mistake that some people make is that they think that they have caught it. I caught it. Okay? And it starts ripping.
I'm not in the long. I'm not in the long. So, but I would be happy to participate with this reading for sure. Yeah.
Yeah. And I think the thing is, people expect this, and then price double tops and it falls down. You had the profits, you basically didn't plan your trade, and you didn't execute according to your plan. So for me, the highs, and I know, Andy, you love to do this as well, it's such an obvious profit-taking area because you can swing the highs and fall down. This could be a WXY. Okay, the minimum requirement for your Y wave is to take the high of W. It doesn't have to go to the 1-1 and the 1 point. It doesn't have to. It's the minimum requirement.
Or an ABC.
Or an ABC. ABC. Minimum requirement.
You have the previous move as an example from the lows of 60K. We just wicked above that high, and that has a possibility of being a 3-wave structure.
Exactly.
Literally. So it just wicked up, right? If you're looking for a 1-to-1 extension, then it SFP'd from those highs. It created a double top, so which obviously gives you that aggressive short entry with stop loss above the wick. I actually explained this in the trading community a few days ago, right? Because we were speculating on an ABC flat from the move from 60K. So maybe this move up above 72K is going to be a B wave. So you either break out and hit 73.5K, which we had a naked point of control, or you can SFP the highs, right? If you do wick and get back beneath those highs, it is a strategy basically. It is an entry point and a stop loss, and your target is in an ABC flat, right? When we had that idea, is come to the range lows, right? Which we did after a few days, right? We tapped into the Saturday higher lows, which is kind of your target. yeah,
Exactly. And what I also wanted to say here is, and this is why, Andy, I am still in this trade at the moment. Okay. Because you just never know. I got the question from some people yesterday when I shared the screenshot inside of the community to say that, Devil, when you hedge, how do you make profits? Because if you're going up and down and you're just playing between two levels, how do you make profits? Because for me, as a technical trader, it's about taking some profits. So it doesn't matter which position gets stopped out, I will make profits. But to your point, Andy, this one was entered when we got the when we got the move back above that point of that macro point of control of that consolidation that we formed in April. Okay, I basically entered the retest over here. Well, the retest over here. But most importantly, I took I actually took 60% profits now. I took profits when I saw that. And that is why I have profits. Okay. I'm not a trader that just leaves a trade and hope it's going to go higher. And I don't take, because that's when hedging doesn't make money for you. It's when you don't take profits. You just enter a short and a long and hope one plays out. And then you get stopped out of both positions and you still didn't make money. But then also to your point, Andy, I saw the weakness as well. Okay. And I entered a short. And the reason I entered this short was there. Let me just, where's this pen? This tool works a little bit. Where's the pen? There we go. That was my clue. I'll explain it here on the CVD. If you go back to CVD, okay, this was so interesting to me is because I acknowledge that we SFP the high. And then when we moved up here, bearish CVD. So that's where I entered.
Very good call.
Because now I know, okay, now I've got a hedge against my long. So I took 50% profits from my long, but now I want to hedge because you don't know if this can be an A. Sorry, where's my pen? This can now be an A. It can be a B and a C flat. So I still want to make profits. If I get stopped out from the long, I still want to make profits from the short. And then definitely looking for longing opportunities.
Yeah, I have to say that's a very good hedge because a lot of people don't understand as well the hedging part of trading. You got a good entry from the lows on a long and that SFP short. So, and now the price is in the middle. So you're like seeing who's going to win the battle basically here in the next couple of days. But you cannot enter a long and a short at the same time at the same price level, right? Because I actually, even though it might seem a silly question, but actually people do question that. Like, how can you, on the higher time frame, you need literally shorting from much higher and longing from lower, right? And then as you take in profit, then you have equal of position or similar position, and you see who's going to win the battle, basically, right?
So, Andy, I love what you just said now is because, and the reason I love it so much is because I used to do the same thing when I was starting out. Hedge mode is beautiful, man. You just enter and then you have a stop loss and then the winning trade gives you money. And then what happens is you get stopped out of both and you pay fees. So what I used to do is you enter a hedge. Yeah. Let's say, for example, a short and a long. You put your short stop loss here and you put your long stop loss here. And you're just like, well, I don't mind getting stopped out of either one. If it's going to go, it's going to go. And then what happens is it does this. Because now that I'm more experienced, I know that this can be a 5-wave move up. This can be a 3-wave move down. This can be a B flat and this can be a C flat.
Yeah.
Or it can form some sort of structure that basically, it just depends on where you put your risk management. But to your point, Andy, this is not how you hedge. It just doesn't make any sense. The best way from an experience perspective is to, you have a long.
Yeah.
Your profit-taking area, I love to hammer on this point. Your profit-taking area always becomes an interesting shorting opportunity. Why else would you take profits there in the first place? If it's not an interesting shorting opportunity, it should also not be a profit-taking area. The reason I took 50% profits here is because when I zoom out a little bit here on the 1 hour time frame, let me just clean up the chart a little bit, and you take a fib, guess what? From the high to the low, well, you tapped a 0 point. Let me just make sure that, yeah, that for me, when I saw the rejection at this fib level, just doesn't want to get through. And then it tries again and it gets acceptance back below. And then you have bearish CVD against that little pivot. It's like, no, yeah, I'm not going to risk this trade. And then it does this. And I was in profits. I'm not going to risk those profits. I'd rather protect position, take 50%, enter a short. And now that's, for me, I think that's, and I see that's how you like to hedge as well. You've already made money with the trade, and now you're hedging at a profit-taking area against that trade so that you can make money in the opposite direction.
Yeah, exactly.
So,
I mean, it's crazy how, you know, with experience, you know, we've been many years with, you know, charting. Look, you know, I've tested all sorts of indicators, tools, and everything, and I have to say, Elliott wave theory is without a doubt one of the most powerful ways of reading the movements, you know, combined with Fibonacci naturally and levels of resistance and support. But it's crazy how, as you get the information, you realize when you need to take profit, when you don't need to take a trade, right? As we were explaining on the lower time frame, if we just fall from here very aggressively and we don't kind of form a corrective, you know, consolidation, that is the decision making of, I take the trade or I don't take the trade, right? With the information and the knowledge that we know, based on the probabilities, right?
And it's also, I think what a lot of people maybe still struggle with as day traders, Andy, is patience to wait for the structure that makes sense for you to trade. I think people want to trade every day, and they think the more they trade, the more money they're going to make. But you're actually exposing your capital to risk every time you open up a trade. You know, this is something that I often, for the community members, you know, I often preach this inside of the community. If the structure doesn't make sense, don't trade. Wait until it makes sense for you. Because someone might post a trading setup, for example. You take the trade, but you don't understand why you took the trade, which means you didn't plan the trade, which means you don't know where to take profits, which means you don't know where to put your stop loss. And that's how you get in trouble. So I like to just trade the structure that makes sense to me. And I mean,
exactly. I've noticed with the years, the more years that I'm trading and the more experience I have, instead of trading more, I trade less. I trade less, obviously with bigger amounts. But you just want to get into the good trades at the end of the day, right? Yes. And when you have a little bit of doubt and the probabilities are not in your side, you can see both scenarios happening. You know, there's always that moment on the chart that you're going to have that high probability trade, which is, you know, we have one potentially right now, and the invalidation is absolutely sweet. It's clear, it's sweet. We have a potential finish structure to the downside. You know, the problem here with a lot of traders, well, newbie traders, right, and people that do been trading for only a few years and you know, don't have too much knowledge, is that, you know, and this is what happened in my first few years, is, you know, I wouldn't have an invalidation. I would say it's going to bounce at some moment, right? And then, you know, I'm longing and I don't have a stop loss. I would add to the position at slightly lower levels, and then the price tanks, right? And it takes a massive fall with high volume. And then I would just panic, add to the position. For example, I'm going to get liquidated. I need to move my position lower and my liquidation lower, right? And it's a death spiral that everybody goes through that. Everybody goes through that. You know, and I've been through that many, many times. And, the more you go through that, the more you learn, you know, the more you know what you do not need to do, right? And that's the beauty as well about the learning curve. I think it's important that people actually get liquidated, that they lose, a couple of accounts, because
that's how you learn.
Yeah, it's super. I think it's the best learning education that you could get. Not people on YouTube, technical analysis, and obviously this helps because I hope that we are accelerating the learning curve for many people here on YouTube with learning how to position yourself, manage risk, read invalidation levels. And target zones, and I just hope that a lot of people, I do get a lot of DMs and a lot of comments of that we're doing a great job with the education side of it. But at the moment right now, reality, there is a position. We've been waiting a few days, right there. We've been waiting a few days for the possibility of maybe bottoming out in this correction in the last few days since we created that high of 72k. With the reading, there is a possibility of a finished move down with the lows of yesterday. It's not a great low. We were discussing this before doing the collaboration. It's not a great low. It's pretty fast, a bit of a sharp move down, but it's valid as a potential low. And it's actually the value area low when we get the move down from 60k. It's actually holding the value area low, and we're kind of faking out, right? When you get that fixed volume profile from that, even from slightly back, but literally around about that range. And we have this potential impulsive move from the low of yesterday, a clear corrective structure in the last few hours, well, between early this morning, right, and this little range that we formed. And now we have another possible impulsive move to the upside, right? Double 1 2
3 4 5. 1 2 3 4 5. So you want to hold the trend.
And also I do like that because we have that lower high trend line as well, which is a very classic level where people would long the breakout, and now eventually whoever long the breakout is going to be in a slight loss, right? Slightly underwater, where you get that movement down to get back beneath the trend, and then we need to see that price holding, right? Or maybe even getting supported at the moment, right? As we can see here from that lower high of 72k, that trend line that you have. This is like a very, very interesting level for sure to form that higher low, and clear invalidation as you explained there at 66.4k, which was the higher lows of early this morning.
And I also think, but Andy, I don't think this is valid anymore. And we spoke about this just before we went live. You have a 5-wave move up, you have a 3-wave in a A, and then you have a B. But B is not allowed to be a 5-wave structure. But let's say for some reason you can count a 3-wave structure in there. You label this a B because it did tap B flat targets. And now you form a C here to the downside. A, B, C. You do not take this low. This is why actually, and this myself and Andy discussed this as well, because before we went live with you guys, we were in a chat for 23 hours, and price was here. So we were looking at the structure, and we looked at the 3-wave down, and the first thing that we said to ourselves is if it rejects, you could have an A, B, C. Do not claim the low, and then you have the fake out, which is happening now anyways, and then you get the bounce to the upside. But then we were also giggling to ourselves to say that, well, what if it makes that one more low, and then it's a 5-wave structure? So I must say, for the bulls, or for the that's not a pretty B wave. So I would count this as a separate structure, and I would count this as a separate structure. I think the most interesting thing for me now is, Andy, if price continues to fall, and I've just put this line here, that's my minimum requirement. If price continues to fall and it claims the invalidation, I'm not interested in this long yet. I'm not interested. It's not my rules. If price still stuffs, like you said, if price still dances around,
then it looks in.
Now I'm going to long. So guys, for those of you that maybe joined a little bit late and you only caught the back end of this conversation, this is not where we're longing. This is why I have the white line on the line. If price, let me just take the scribble here out the way. If price does not take this low and it starts trading after the white line, then I'm interested in the long. As long as it's falling not interested.
There's nothing to do. There's
nothing to do.
Yeah.
Absolute nothing to do. And also, by the way, guys, myself and Andy always mentioned, we spoke about the community. We told the community. We mentioned this in the community. If you want to be part of our great community, there are 2 links down in the description. For myself and Andy, just DM us. You can choose which link you want to use. Doesn't really matter. Just DM us the word access and we'll get
you in.
60 days free access. You just have to follow some instructions and you can get access to the community. Andy, I saw you posted some updates this morning. I posted some updates this morning. And also when we finish the live streams, where do we usually go? Inside of the community, read through the comments, interact with people, answer their technical questions for them. So definitely a great place to be.
Yeah. Fantastic collaboration I can see in the comment section. People actually liking this because it's calm. We actually discussing, how we are patient and what we're looking at for the next opportunity eventually. Now, we know the long side of it. We know that this could form a higher low. It's a little bit too soon. We're just getting that pullback right now. I guess we're just hitting around about the golden pocket or the 50% Fibonacci from the recent higher lows. So we dance around here. I mean, I think this is where it looks interesting to analyze that very low time frame that you have right now. And if we start pumping a little bit and claim those recent lower highs, this is already going to be looking corrective. Basically. So if we do get that, a little bit of,
I want to see the overlap.
That's starting to see that overlap structure. It's going to start looking very, very interesting. But it needs to hold, right? It's all about being patient because this could continue tanking and it gets below 66.4. So there's really no rush. We want a little bit of more confirmation that it could be corrective. So a little bounce and then another retracement. Then it's like, okay, now it's looking really good. And the previous range that we had in the last 24 hours is just the perfect example that we have here for that double 1 2, and that we had possibly a 1 and a 2 formed this morning. You can see we've claimed that low that we had, and then we got a little bounce and we held above the naked point of control, literally dancing around. And that's already giving you the timing of, do you want to take this trade to take the recent highs and you're saving some open just in case it breaks out, right? Literally. So best question that I have right now, we're talking about the bullish case.
Let's talk about the bearish case. Yes, because
bearish
the one
case
thing
scenario.
The one thing I want to point out here to you, Andy, and I mean, anything can still happen, but what I have seen playing out many times is if you have a sharp move down so early, it usually continues.
Yeah.
So I mean, we have not claimed the invalidation yet. So there's still a lot that, but when your initial move is so sharp down, you know that you still need to, like, you're getting too close. You're getting too close.
Yeah, absolutely. It's a trap. I would never, me personally, long right now, because you might think, oh, we're hitting the, golden pocket 7-8 Fibonacci zone. It needs to form a higher low. It's a little bit too fast of a movement down. You're like catching a little bit of a.
That's the right word. It's happening too fast. Yeah. So now, I have to, and this is why we have not entered the long. And myself and Andy were talking. Was like, if this plays out, we're going to do a live trade here on the community. But now you can see how we wait for the opportunity. It does not meet my trading criteria yet. So therefore, I'm not interested in the long. So now,
interesting what we were talking. Sorry to cut you here, Devil, but what I say a lot of time on the streams, because we look at both sides of the picture. We've been obviously, because we're doing a collaboration right now, we've been stuck with this momentum in this range. But if if I wanted to have taken the short position, we like to say, well, we're moving down right now. I always say, as on the education side as well, for people to detect this, on their own, is getting into a short on the potential fifth wave, and how the fifth wave, a lot of the times on the lower time frame, rejects from the third wave and forms that double top or SFP. So if you ask, where would I have shorted, right, in this range? Even though if it's a double 1-2, you can already protect your position. You got an awesome entry. If it forms a higher low, that you just have your position protected in this case. But as we were explaining as well, what if this is an ABC instead of a double 1-2? But if you wanted to get into this short, and it actually got an SFP from that previous high as well that we had on yesterday's bounce, which actually just claimed that lower high that you have here on your cross right there. Yeah,
this one.
It actually even claimed that one. And as you see on the lower time frame, we actually had 1, 2, 3, 4, 5, right? And that fifth wave is interesting for a double top. Yeah. So anyway, just looking at the other side of the picture, right? When we're looking at the 5-minute, 15-minute time frame, it's not only longs, it's not only shorts. When you want to get into that trade, we need to consider both sides, right? And if you have that 5-wave move to the upside, eventually you can attempt that short on the fifth wave, and especially if you're claiming a pivot, right, which was yesterday's lower high. Roundabout. Yeah, you take that as a guidance level as well. Yeah, I mean, we're getting a little bit of a reaction here. Let's see how this plays out. But
so now, let's talk about the bearish case scenario, and also, and why I agree that this was a very good short attempt, because now your position could already be protected if you did play this SFP. The most bearish case scenario. And I don't really want to give it probabilities. I just want to take some of the stuff here out. Let's just delete all of this. I don't need it. Okay. Most bearish case scenario, guys, and I'm just going to freestyle it over here. I don't think I actually have it folded, for lack of a better word, is that
I freestyle my streams all the time.
let me clean up the chart. Let's work with a pen. I think Andy loves to do this pen scenario. This structure can be counted as a 5-wave structure. 1, 2, 3, 4, 5. Okay. Now, what becomes interesting is on the smaller time frame, I really struggle. And I think Joan, one of our community members that also specialize in Elliott wave theory, also pointed out this structure to me and said, Dewald, it is extremely difficult to count this as an impulsive structure. It's a mess. So the one scenario is 1, 2, 1, 2, 1, 2, and you just fall. But I think let's keep it simple. You have an impulse, you have a 3-wave corrective structure for this impulse. So that becomes 1, this becomes 2. Then you have another 5-wave to the downside. 1, 2, 3, 4, 5. And now this is the correction for this impulse. So you have another 1 and you have another 2.
Yeah.
You want to see overlap, which you got. It's classic to see overlap in a double 1, 2. But to keep it simple, you have a 1, 2, 1, 2. Maybe that was it. Okay, it rejects. Everyone's longing like crazy people because they're not following their rules, or they don't know better. They're still learning. And the worst thing that can happen now with this scenario, and I think I need to zoom out a little bit. Okay, because this can get really ugly here to the downside. And let me grab this little tool here. My favorite polylines. You have a 1, 2, 1, 2, and you fall with increasing volume. You want volume to see increasing, and then you want to see 4, 5, 4, 5. So you want to see a repeat of this over here. And I don't care about the fall. I care what happens here. The fall tells me with higher volume that I now need to start paying attention in this zone. which is now here below these lows. Very interesting. And I don't know if you've got your monthly levels also marked out, Andy, but I think the most interesting levels here to the downside
There's a few
is we
daily
have
levels also. Monthly
we
point
have
of
some
control, yeah.
weekly levels, we have daily levels there, we have point of controls there, but the two that looks most juicy to me is that we have a monthly naked point of control and a monthly. So this zone looks very interesting. The $58,000 zone. But I have to see this. I want price to fall with increased amount of volume, and I want to see double bottoms form on decrease. So you want volume to go down while this is happening. Now that is where I get, and the interesting fact from my trading journal, these structures is where I make the most money. The most money.
Yeah, these swing trades, these.
Because you see the nested 1-2s, you see the drop with high volume, and then price chops. And it takes the low, but it doesn't break down. And it takes the low, but it doesn't break down. And volume starts decreasing. For me, that's just a beautiful opportunity to say, you build a position in the zone, you have to have an invalidation. So you need to plan it properly and just to see where you put your invalidation. But when you have an impulse, you at least expect a corrective structure to come and tap the first area of resistance. That's most common. Okay, great profit taking area. If it wants to continue, leave a runner. If it rejects and falls down because maybe this is a 1, 2, 3 or ABC, then let it go. Sorry, I just need to clean up this absolute mess that I've created here. But I guess I'm getting the point across. The most bearish case scenario has not been invalidated. And I think the most important level that the bulls needs to claim is this little pivot here. And I'm going to use my magnet to snap it on perfectly. This little pivot, and I know it's far away, that is a confirmation that you want to see that the bulls are getting the upper hand. And people might say, well, isn't it better to long here? Yes, if you have a trading strategy that enables you to get in at lower prices, by all means. But if you want a confirmation trade, you have to wait until the bulls claim that high, because that invalidates the structure.
Yeah, the multiple 1-2s.
The multiple 1-2s. So what you could do, and I don't know how this is going to unfold, if it wants to continue, maybe you get a nice little correction and that's where you get in. I'm not going to long over here. It's just not my trading style. I have seen traders, and I'm not going to mention names, that will enter here with a stop loss below the low and maybe a TP over there, and they play the 1-to-1 risk to reward trade, and they are very successful in doing it, but it's not my trading style.
Yeah, I also like to wait for a pullback, but sometimes the pullback, the move out is extremely explosive, right? And you're waiting for the pullback with your coffee, and then you have another coffee, and the next day you're waiting for the pullback, and pullback doesn't come. It just explodes in a wave 3, right? So but this is why on the lower time frames it's actually interesting to detect these little 1-2s, as we were explaining today from yesterday's lows. This has a chance for a couple of 1-2s here to get that breakout to the upside. So I mean, I think we our analysis is very similar. We definitely have that experience, and we know how to read the market, have our invalidations, and look for the setups, the high probability setups, and most importantly is having the invalidations, right? Because stop loss is part of the game, right? It is part of the game.
It's there for a reason.
Exactly. Yeah. So anyway, I'm not sure if there's any other scenarios here locally that we can discuss.
So I think the only other one, so sorry to interrupt, Andy, I think the only other one is, I mean, you're more than welcome to share your Elliott wave scenarios for the scenario, but I'm just going to keep it simple, because I see sometimes people are like, here you go, teaching us the ABCs and teaching us how to count to 5. So the only other scenario that looks really interesting to me, let's say we don't form that double 1-2 and price stops. Okay, you have the trend. Price is currently now trading back above that trend. That's also, it's a good sign. But let's now play out a second or third scenario here. Often what I have seen is that you get a fake out price
Yeah.
starts trading, it invalidates the 112, okay, and it falls down. The next interesting area is this point of control, because there is an Elliott wave count that supports this move as well. You get the fake out, you claim the low, and then you get the breakout. So if this little multiple 1-2 does not play out and we do fall here to the downside, regardless of the 1-2, if we fall here and price slows down, it consolidates, it's not dropping, because remember, in a 1-1-2, in a 1-2-1-2, you want price to fall and accelerate with increasing volume. If price stops and starts consolidating, it's not falling anymore. What's happening? You're getting those small little bounces. Okay, that and this is a very interesting longing opportunity as well, because there is a scenario where you could have a W, X, Y, maybe an A, B, C. You finish your correction, you still form a higher low, and then you get the breakout to the upside. So I think at the end of the day, Andy, it's about sitting on your hands and seeing which scenario where price needs to come to your area of interest.
Yeah.
And my first area of interest is, so I see you also like to say that, Andy, is to say that you have to have a plan. Do you have a shorting plan and do you have a longing plan? I must be honest, where price is at the moment, I'm way more interested in longs. Okay? Because I'm already in a head short. So if it wants to fall, it's going to fall. The shorting opportunity for me was here. The longing opportunity was here. But where price is now, I am personally more interested in longs, because I know in a 1-1-2 long, in a WXY long, in a 1-1-2 long, like there's just, with a drop like this, with so much volume, there's a higher chance with or without taking the low that you're going to get a relief bounce to the upside, maybe here to $75,000.
Yeah. I was just saying that we got a nice little bounce here. Would be looking at the lower time frames, maybe. That this movement down, it's still too soon based on the timing. But anyway, when we talk about the invalidation, literally, that we said, even still with that sharp move down, I mean, it is risky, but your invalidation is crystal
so
clear that we talked about it, and the risk to reward. This is not, if you're long in here, I wouldn't treat it as a scalp, which means you need to decrease your risk on the percentage, because you're looking for a 5-6 to 1 risk to reward. This is super important to understand as well, because a lot of people, I had many problems with this in my first few years of trading, where you don't get clear the percentage amount that you're risking on each trade. And on some trade I'll risk 5%, and on some trades I'll risk 10%, and on another trade I'll risk 3%, and you just flip-flop with the percentage, and until you actually get stopped out 3 times, and then you said, oh crap, I lost 40% of my account. Which with experience, and I'm very good with numbers, you calculate the this, for example, we know the invalidation is 66.4k, that last higher low that was formed early this morning.
This one,
you can risk peanuts on that drop, and to basically make a 5-6 to 1 risk reward, because it does have the potential to go up there from this point, right? And it's all understanding when we chart and when we look for trading opportunities. There is that moment after getting certain information, which we have a lot of information right now with the movement down that we had since 72k. The different combinations of a correction, the timing is nice from the bounce that we got from 60k. It kind of feels ready, right? It's ready for that move to the upside that could literally be hours away or maybe a few days away. And based on our knowledge, based on knowing about timing, Elliott wave, Fibonacci, we realized that the pump could could happen, today. It could happen tomorrow, and this has a possibility of forming a higher low, literally.
And I think also because of this overlap. So I mean, I was looking at this to say that, well, okay, while we were talking, I was looking at this as a 1 2 1 2, and I wanted it to fall and form the 4 5s. I mean, that becomes a longing opportunity. You play the retracement, you get out, and then maybe it can fall again. But then now what's happening is, dare I even go, Andy, you're such a bad influence. Now I'm here on the 1 minute time frame. Okay. You have this choppy structure and you have a move that's now overlapping, and it usually to have a 1 2 1 2 and a big 1 2 and then a 3 4, it's not the highest probability at the moment. But I like what you said as well, Andy, is to say that, well, when you have such a great, you know exactly where your invalidation needs to go, and price falls like this.
It backtested the point of control there, the naked point of control.
Yeah, I know from a timing perspective, it does not look great. But I think what I also know from experience is that this low, even if the correction continues, does not have to be claimed, because you could have a WXY in a triangle. This low does not get claimed. So maybe price does this. Okay. And then it goes. And this was your correction. This was all part of your correction, and then it goes. But it's time for me that is important. But the lower you can catch the entry to your invalidation, it's this then, well, if you get stopped out, you lose almost nothing. Like, it was worth an attempt. And I took one of those trades, I believe, on Monday or Tuesday. I think you saw in the community. I got a reaction at like a small little 1-to-1 extension, and people asked me, why did you enter the trade? I was just like, the risk management was amazing. It's worth getting stopped out if you're wrong.
Yeah, exactly. And this is the explanation that I wanted to give of, the risk reward potential, right? Eventually, at the end of the day, we're not here. We try to be more right than wrong eventually, with the probabilities. But what is the second most powerful, thing that a trader has? It's his own risk management, right? Because and this is what happens as well when you have these trading, we have a trading community. At the end of the day, people are going to do whatever they want, even though you educate based on invalidations, risk management, because I can get into the same trade, and if I get stopped out, I know it's totally fine for me. I'm not gonna. It's something that's absolutely natural. But then on the other side, I am worried of other people that maybe takes the trade and risks way too much on that single trade. It's just one more trade, and oh man, I really thought that this was going to play out, right? And I actually went risking 20% of my account, and I took a really big hit. At the end of the day, it's just another trade, and it's just another stop loss if it's hit. And it should not affect you. If it is going to affect you, you're risking too much, right? But anyway, about this, I kind of really like where we at, Devil.
I also like it. I must say, I also like it. But you know what? If I had maybe my BTCC account open, I think I would have definitely given this a go. But I am very content with the trade that I'm in here with from a longing perspective. So if it wants to continue and stop my short out, I'm happy for the short to be stopped out. So I don't really want to add to this position. I just want to let the plan play out. Position is protected. I already took profits. If I get stopped out of the short, at least I'll be stopped out with $3,000 profit. If the long continues, then just more profits to the upside. So I think if I had my BTCC account open, I would have definitely attempted a little bit of an entry over here, because the risk management is amazing.
Absolutely, yeah. Because the fun, as we do as traders, we create many plans at the end of the day, right? We try and create those higher time frame plans. We create the lower time frame plans as well, just in case. Because I'm talking about a plan was also mentioned on yesterday's live stream. I'm interested in longing at the, depending on the move down, if we get exhausted at this 64.5k zone where we have a point of control of a range, and we could definitely slow down there. It could be a WXY, and then you end up waiting for that level, and then the price pumps. And in a couple of days, we're trading above 72K. And you're like, oh man, I was waiting for that. But this is why it's so important. The new information provided on the chart, which is the one that we have from yesterday's lows, holy moly, we might not come down there. This might be the double 1-2, and we're going to break up. Yeah.
And then what you see is...
And then, well, exactly. You know, we
and there might be an opportunity. Maybe, I don't know how aggressive, because Andy, we both know this is a big question mark in terms of how high it can go. Like if you have a double 1-2, they can really extend, you know, 1.618, 2.618. They can, a third wave doesn't really have a target. They do like the 618 targets. It's up to you how many digits you want to put in front of that 618. But what you could look for is 1 2 1 2 3 4 5 4 5. You look for the exhaustion, that becomes a shorting opportunity. But then it's the retracement that becomes interesting longing opportunity to catch the next movement back to the upside. And that's why I say there's always another trade around the corner, even if you think you've missed it. If you think you've missed it, you can...
Don't worry.
Depending on how the structure develops, you can still get in. You just have to be patient and not FOMO in here, because you could be FOMOing in when it's busy starting to retrace. And now you're underwater, you get out of the trade, you bite your nails. And
But that's why we are here. We are here for all of that. We are here for all of that. We got the community. And I think the power of education and knowledge is the most important, right? Getting signals and possible trading setups is all good fun, but at the end of the day, you know, the power of knowledge is where you're going to stand out, basically, right, for your future trading opportunities that you take. Yeah, I mean,
definitely.
Interesting zone. I mean, based on the timing and where we are at the moment, you know, it's without a doubt, I think a bigger move is likely going to happen. But yeah, as you said, you know, if people are interested, you know, in the community, there is that 2 months for free at the moment. You know, we've got our DMs open, guys, so we can hop you in for those 2 months for free. It's super simple. You need to sign up with one of the affiliate links that we will provide in the Telegram, and you get 2 months for free, and you see what it's all about. It's an open community. We provide, you know, daily updates, mainly on Bitcoin, but also other markets. You know, it's an open chat as well, so we answer questions, and that's what it's all about, right? We know that trading is a lonely game, and if you have a community, it makes it much more easier, right?
Yeah. How long? Hour and 20 minutes already, Andy, inside of this live stream providing alpha. I mean, you could just get carried away with the conversations, and so interesting. Myself and Andy, by the way, guys, we always, when we jump on calls, it's like, Andy, can I talk to you for 5 minutes? You know that thing that says 3 hours later? We're still in the same call. You could just get lost in technical analysis. I just love it.
But it's also good because, you know, we remind each other as well. Because, you know, we're not machines, we are human, and we also can be, you know, we actually create mistakes, you know, and this is with everything in life, right? No matter how much knowledge you have, and it's always good to have, you know, we do. This is why we decided to combine forces here on the channel, because you know, at the end of the day, we're going to support each other on you know, basically the education, the setups, and then obviously it makes it more powerful than only having, you know, one brain, right? Two brains with knowledge, you're going to absolutely crush it. So I'm excited for the future of the channel, and basically for the education that we're going to provide, that we're going to make 2026 absolutely massive, regardless in a bear market or a bull market, right? We're looking for trading opportunities. So
yeah,
excited times.
I don't know if you know that saying, and maybe I'm saying it incorrect. If you want to go fast, go alone, but if you want to go far, go together, you know. And that's one of the things I told Andy as well, and we discussed, is to say that, you know what, if we join forces here on this channel, you know, we can just give the community so much more value, because although our analysis are very similar, I think we explain things differently, and sometimes there's something small that I've picked up that you haven't picked up, and then maybe that you've picked up that I haven't picked up. So the community just finds so much more value in the channel. And I think, you know, the fact that we've joined forces here on this channel, it's basically, you know, just for more value and more education for the community. And for those of you that don't know, that's maybe watching the stream now, is that I do the morning updates here on the channel. The reason I didn't do a morning update today is because myself and Andy were naughty. We were planning a collaboration here together. So, but from, tomorrow, Monday, Tuesday, next week, I will do the morning updates. It's round about 11 o'clock Central European time. That's the time zone that I'll do the morning updates. And then obviously you'll have Andy here during the New York open session, giving you guys the alpha.
Yeah, I think we should do more collaborations. I actually enjoyed this. I think the community, guys, smash up the like button if you did enjoy this, and leave us in the comment section. Should we do this more often? Maybe at least once a week. We could choose maybe Friday for the close of the week. I think it's it's really good because we actually combine the different possibilities, levels of interest, and we at the end of the day, I think the different opportunity zones and what we're looking at, the risk management side of it, right, is very, very powerful without a doubt. A lot of times in my streams, I get lost with the comment section, and we just create a bit of a show. But combining both of us here in a collaboration, I don't have time even to share my chart, but I couldn't agree more with you here, Devil, with the scenarios and the opportunity zones. It's just hand in hand here with what you mentioned, basically.
Yeah, I mean, for me, Andy, just also one thing that I wanted to point out is because I got this question, and this is why I'm talking about it, is some people are saying, well, what if this is a three-wave structure? And it three waves back up here, okay? So yes, I think I discussed this in one of my live streams as well. If you take Fib, and Andy knows, and I think Andy, you said this yesterday in your stream as well. David loves him some Fibs. It's very interesting. Do you see that? It's very interesting where price found support. But now again, this is where probabilities kick in. I have seen, okay, let's talk about this as a three-wave structure. A, B, three-wave B, and a C, aggressive C here to the downside. C waves generally carry also a lot of volume at the low. They do carry, so it does have the characteristic of a C wave as well. A, B, C. Yeah. And in Bitcoin, specifically crypto, I have seen C waves tap the 2.618. I think the one that I've seen, that the most extended C wave that I've seen, and I need to go and find that example, is the 3.618, where it turned out to be a three-wave structure, and we went and we claimed the high again. So, but now this is where probabilities come in, is to say that, well, in Elliot wave theory, it states that when you have an overextension like this, from a probability perspective, it's better to label it a wave 3. Yes, it can be a wave C, but it is a rare target, but possible. So yes, it can be a three-wave structure. And there's that chance that it does this. Definitely the possibility. But it's also very interesting to see how we tap this level to perfection, and we got the bounce. These 618 levels, because Andy, I think what sometimes frustrates me a little bit is there goes Devold with his 618 again inside of the comment section. And I just want to show you guys, well, look at how these levels get respected. 2.618 tap to perfection. Andy, I saw you talking about silver yesterday or the day before, and you also showed people the fib extensions on the lock scale and on the regular scale. Guys, I mean,
the golden ratio.
We don't know why these numbers work, but they do.
Exactly. Exactly. Okay. Fibonacci is very, very powerful for sure. It's just it's like written on stone. The levels just get respected. The golden ratio, the 618, is something magical. It just when, especially for the people that say that technical analysis doesn't work. When I could prove you with just Fibonacci that the price gets respected at so many fib levels, which is absolutely crazy. So
it's like when we got respected with this. I mean, here's one stupid example. Okay, from the low to the high, where did we get the bounce? I mean,
50% Fibonacci.
50%,
Yeah, and also when you look at the correction down, if we do combine that WXY, we literally hit the 1-to-1 extension, right, as well.
Oh yeah,
When
I
you when
saw.
you
Yeah, we're talking about this
yeah,
yesterday.
yeah,
Was
from
it
that
this
low
one?
and
This pivot?
and
Yeah,
that one,
there we
yeah,
go. Let me take this
one
out.
to
I
one.
mean, look at this. So I mean, I'm sure you get these comments as well, and not during the live stream. After the fact, I always get these comments of people saying that, here you go with your Fibonacci levels. The market is manipulated. How can you trade a manipulated market? Well, the thing is, as a technical trader, you need to outsmart the market. That's how you make money. You need to scratch your dollars off. But I've done so many Fib pools in my life, and I'm always amazed about how these get respected. I mean, if you played that SFP, there's your money in the bag. Okay, you can also say three-wave structure, take profits, you've got a trade.
Yeah, yeah, and it's interesting how you approach these, because they are aggressive entries, literally, because this is catching the low or catching the high at these fib levels. But the only way you can trade it is you tap it, you get beneath it, and you get above it. That pivot low, your stop loss goes below that pivot, literally. And and your stop loss is so small compared, you're going to make a 1-to-1 risk reward on this, easy, like at a bare minimum, if you get stopped out, if not, right? And this is, I think people do improve their trading when they improve their risk management, because the main issue in trading is 100% risk management. I can tell you already, because I read dozens of books about Elliot wave theory, volume profile, and many all different indicators. But I would still not make profits. I would still screw up my emotions. I am risking more on this trade because I like it more for some reason, and now I'll add to the position and stuff like that. And that's the mistake is not your knowledge on technical analysis. It's you as a human being with your emotions when you relate it with money. Basically, the relation with money makes you a bad trader. Once you start decreasing the risk, I mean, I can tell you're going to start seeing money flowing. Not as much as I'm going 50% in with what I have. You say that, somebody has $10,000 and I'm like, yeah, I'm risking $5,000 on this trade because, I'm going to make 20K if we do get a 4-to-1 risk reward. But this is how you scale is what is amazing. Once you start decreasing your risk on every single trade, is when you're more patient. Because I've been in trades. The best trades that I've taken are the ones where I'm not risking that much. And that's where you're like, oh man, I'm already at a 3-to-1 risk reward, but I'm not going to take profits because it's not even worth it. Imagine if it's not worth it for me to take profits at a 3-to-1 risk reward. Imagine the stop loss. That's nothing. That's nothing. So if you're not taking profits at a 3-to-1 risk reward, then let it stretch, right, kind of thing. So it is super important. I think people need to realize that, because I think it's one of the main issues in the trading industry where most of people are not profitable because they burn very quickly. They risk too much. But when you're risking not that much, it becomes a very, very lucrative, fun game at the end of the day, right? I see it as a game. It's a game of probabilities, and you want to catch the right side of the game. And if you're not catching the right side of the game, you want to be defensive, basically, right? You don't want to risk that much. So
exactly.
Yeah.
So yeah, I mean, Andy, I did not take this trade, but I think if I would, because I know myself and I know how I would have played this trade. But to your point, you see, because a lot of people always ask, how do you play swing failure patterns? So here you go, crash course. Price dips below the level, it gets acceptance back above. Basically, it starts trading back above the level. Even if you're a little bit late, let's say you catch it over there, okay, and that's your entry, but you can still see the amazing, your stop loss is 0.57% away, because that's where I usually put my stop loss, at the low. So to your point, it's such a small stop loss. I mean, if you're going to go in 100x with your entire account, that is a significant stop loss, and you're going to be biting your nails in front of the screen, and that's why a lot of people struggle. Where I would have planned, or where I would have taken profits, is I like that consolidation area, and also the bottom. That's resistance, clear resistance. So that would have been my trading plan. I know myself well enough to know that if I entered this trade, I would have taken profits here. When I saw the consolidation price slowing down, that would have been my TP1. And then this would have been my TP2. And you might be asking, Devil, you're just dragging it up because price went there. No, that is my TP2. Because you're hitting resistance. I know myself well enough, I would have taken profits there, and I would have closed my position there, or maybe leave a runner for higher levels, but typically this is how I would have taken this trade at this reactionary level. So there's your crash course on swing failure patterns. Okay.
Yeah,
Andy.
I was just going to comment on that. It really depends on what kind of trader you're looking at. If it's going to be a scalp internally, or if it's going to be a day trade or a swing trade. And I was very vocal about this range downtrend that we've had since the basically 71K zone, the recent highs of last week, that we're consolidating in a day trading zone, right? Getting into a swing trade here, without a doubt, we are downtrending, and that 72K wick that we formed on Sunday, I was vocal about. This might be a swing short. It might be, that swing short over there. Maybe this could be the high, and it actually rolls over in the next coming days to the lows. But when you get back inside of that range, it's like, you're really looking for intraday scalping scenarios, because the price is going to range up and down, right? So, and we still don't have the information of what could be on the formation here, basically, right? We have so many scenarios when the when the bounce is fresh, right? Since we got the move down to 60K, and then we form that first bounce, it's like, this could morph into so many different scenarios, right?
It can be an A, B, C,
it could
W,
be all sorts.
X,
and when we consider a wave
Y.
4, maybe it's a wave 4. Then wave 4s, we know how they perform, right? They could be whatever. It could be a triangle. It could be a flat. It could be a zigzag. It could be many different complex movements. But
and often the structure doesn't make sense, Andy. Just to maybe end it off here, often the structure doesn't make sense yet, but then after a while, you're like, okay, it reminds me of this, Andy. I mean, this structure. Do you remember this?
Yeah.
So you could say that maybe we are over here. Maybe we over here. We just had the first bounce. I mean, it's not exactly the same, but can you see, if we are only over here, look at what can still happen.
Yeah, as a range.
And you you're like W, X, A, B, C, you're trying to count the corrective structure from here, but sometimes you need more information to say that, okay, now this starts looking like a W. Okay, you're forming that triangle in the X. Okay, now I'm looking for the last move in a Y wave, A, B, C. Now, after all of this time, you know that is a shorting opportunity, but you need all of this to play out to identify that trade. So it's a patience game.
This was 2 weeks ago. Time flies. I'm not sure if it was a week ago or 2 weeks ago already, late January, right? But when we formed that range at the 90K level, it was like, below that level. So we got the drop down in an impulse. We had that potential impulse down from that level. So from the one this one, right? After that corrective structure, when you take a look at timing, we're just so aware of, we're looking for a corrective move here at the 90K levels. And whatever happens here, it's likely going to be corrective after the movement down there. So
Yeah.
When you look at the range there after the movement down, we're just looking for that zone here to be corrective. Yeah, basically that area that you have when you zoom after the impulse down. So we got the movement down and that potential impulse. Then looking at that range that we formed throughout the 22nd to the 27th, I think, of January. So when you
this one.
yeah, that range over there was
1, 2,
discussing
3, 4, 5.
Yeah, or even
or
the
4,
shorter
5.
4 and 5.
Yeah,
Exactly. Yeah. It was like we are days away of potentially getting a big move down to claim below $80,000, which was that range. Do we form a flat? Do we form a triangle? Do we, after a few days, we just started rolling down very aggressively. So it's that point when you have the information, right, that you realize, okay, guys, we're maybe days away of getting the big move, which is the beauty of being patient. So, Devil, it's been amazing. I feel bad for the comment section. It's very, very hard, of course, when we are discussing, previous scenarios, what could happen. We could probably zoom in here on the lower time frame to see what do we have a chance for this local double 1-2? I mean, we're getting some overlapping structure. That there is the chance. There is the chance here, without a doubt, that we could form a local higher low very, very locally here. It would be interesting if there's many. There's a little bit of a problem here. Bybit brothers are have been longing like crazy in the last few hours, which is not nice. It's not nice to see eventually for this bullish scenario to play out, because there's a lot of trapped longs now to the upside with that local move up that we had a few hours ago here at the 68k region. There's lots of trap longs now, which is that's it is kind of CBD is bearish. It is bearish for sure, based on the Bybit longs.
But also
Yeah.
So I mean, CVD is not in our flavor, but I have seen CVD also invalidate itself, because you have to also consider that, even a great indicator like this is like 74% accurate. So there's always that 25% that's not going to play out.
Absolutely. Yeah. It's not rocket science, right? It's not accurate at 100% rate, but it doesn't help on the probability side, of course. Yeah. But that's when your risk management comes into place. Right.
Exactly.
You have invalidations, if you want to take the shot, it is a possibility. And, obviously you need to play with that at the end of the day also.
Yeah.
Devil,
I mean, yes.
Yeah.
Yes. I think we need to end it here. We've been.
Yeah. I mean,
we've
just been talking and discussing the different scenarios. I think you left it very clear on, if we were to break down beneath 66.4K, what are the other levels that we're looking at? And, on the bullish side as well. And on the bearish side, if we nuke down with high volume, we need to wait for that stop. First stop potential zone is that 64.5K area, right? That the price, if it were to drop down from there, when we're considering longs, it needs to hold in that region. I think a valid short entry would have been the fifth wave double top that we also talked about. Yeah, that one very locally would have been an acceptable short entry, like on the lower time frame when you're getting into that fifth wave.
Yeah,
and protect position. But I think we left it pretty clear, the levels of interest, the different scenarios, and it's been great to do this collaboration, Devil, to have to say. And I think a lot of people enjoyed it very, very much. Epic live stream, says Nico Soapy. Thank you very much. Crypto Big Brains is here. Great Alpha. Thank you very much, guys, for joining today's stream. And Devil, it's been a pleasure to do this collaboration. I think we should do more. I think we need to get a date for maybe Fridays or maybe Mondays, maybe the start of the week could be good. We'll do a poll. I'll do a poll on my stream. I think maybe you can do also on your stream, and we can get to the conclusion of what would be the favorite day. Guys, thank you very much for joining Devil. It's been absolutely great. You know where to find us, guys. You have the Telegram down below in the description. You can get 2 months for free. When you send the DM access, we'll share the instructions. You just need to sign up to one of the affiliate links and do a minimum deposit for your own trading, and you get access to the trading community. Devil, it's been awesome. Let's do this again. And yeah, guys, thank you very much for joining, and we'll see you in the next one. Thanks, Devil.
Thanks, everyone. And yes, we'll see you in the next one. We'll definitely be doing more of this. So until the next one, cheers for now.